Bitcoin has been cooling off after hitting an all-time high above $123,000 in mid-July. It's now pulled back to around the $112,000, $113,000 range. Ethereum and altcoins have followed suit, with many down 5 to 10%. But this isn't just random volatility. Over the past couple of weeks, several big macro factors, tariffs, inflation, the Federal Reserve's stance on rates, and even seasonality have combined to shake investor confidence. In this video, I'll break down exactly why crypto is pulling back, what's driving the price action, and what this could mean for Bitcoin and the wider crypto market moving forward. Now, before we get stuck in, I must be clear that nothing in this video is financial advice, and if you want financial advice, you should seek a licensed professional. So moving on to the video. So number one, let's start with tariffs. The US has reintroduced tariffs on imports from Europe, China, and other major trade partners. That might sound like a purely political move, but here's why it matters for crypto. Tariffs raise the cost of imported goods. That pushes inflation higher. Higher inflation means the Federal Reserve is less likely to cut rates, and fewer rate cuts equals tighter liquidity, which is bad news for risk assets like crypto. Institutional investors are already flagging tariffs as one of the most underestimated risks in today's market. That explains why, right after the tariff news, Bitcoin dropped from around 119k to 114k in just a couple of days. It's the classic risk-off reaction. When trade tensions rise, investors move into safer assets, leaving crypto exposed. Now onto the Fed. At its July meeting, the Federal Reserve decided to hold rates steady at 4.25% to 4.5%. Markets were hoping for some hint of cuts coming soon, maybe as early as September, but Powell made it clear the Fed is going to stay cautious and data dependent. That shift crushed optimism. The impact was immediate. Crypto markets saw more than $400 million in liquidations. Because here's the thing. When borrowing stays expensive and liquidity is tight, speculative assets like Bitcoin feel the pressure first. And the Fed's caution is backed by the data. The June core PCE inflation report came in at 2.8% year on year. Analysts were expecting 2.7%. Doesn't sound like much of a miss, right? But it's enough to show that inflation isn't cooling as quickly as hoped. And when you add tariffs into the equation, making goods more expensive, it reinforces the Fed's reluctance to cut rates. That combination, sticky inflation and a cautious Fed, adds another layer of weight on the crypto market. Now, before we go any further, I want to mention Seeking Alpha, which is a tool I personally think is great for researching stocks and crypto and keeping up with all the latest news. They were kind enough to give me a free membership to their site. They haven't paid me to promote them, but I do have an affiliate link in the description below. So if any of you sign up for the paid membership, then I will get a kickback. If you haven't used their site before, then they have lots of great features for analysis, many of which are very visual and easy to digest. So I recommend going to check them out. And if you use my link in the description below, then you can get $30 off your first year. So I recommend checking them out after this video. Now let's zoom out. Even without tariffs or Fed policy, Bitcoin was due for a breather. It climbed from just under $100,000 to over $123,000 in a matter of weeks. That's a massive run. Markets don't move in straight lines. Healthy bull markets include corrections, and Bitcoin is now consolidating in the 112 to 120k range. And finally, sentiment. Institutional investors, the hedge funds, pension funds, and ETFs are shifting defensive. US GDP growth was recently revised down to about 1.4% for Q2, raising concerns about slower growth. So we've got this tricky mix. Slower growth on one hand, sticky inflation on the other, and tariffs that could make things worse. That's the textbook setup for stagflation fears. And when stagflation risk is on the table, institutions typically rotate away from risk assets like crypto. Now, don't get me wrong, ETF inflows are still happening, which shows long-term demand for Bitcoin remains strong. But in the short term, macro headwinds are dominating the story. So to wrap things up, tariffs are stoking inflation fears, the Fed isn't cutting rates anytime soon, inflation data came in hotter than expected, Bitcoin is consolidating after a big rally, and institutional sentiment has shifted defensive. All of this explains why Bitcoin has pulled back from 123k to around 113k. What do you think? Is this just a dip before the next breakout or the start of a deeper correction? Drop your thoughts in the comments below. Smash that like button if you got any value from this video, and don't forget to subscribe and hit the notification bell for more in-depth crypto analysis. And if you're new to crypto, you may be wondering what the difference is between a coin and a token, so I recommend watching this video next. It's been Ollie from Get Geek Finance. Thanks for watching, and I'll catch you in the next one.